All right. Well, we are continuing our conversation here today on term insurance. We're going to talk about kind of two separate topics here today. I'm going to cover the first one for a few minutes here, and then Ryan's going to follow up. Today I'm going to be talking a little bit about living benefits, what living benefits is and isn't. And then there's a couple companies that we would specifically work with. And then Ryan is going to follow up and talk about some of the tools that we have access to. He's probably going to add some insight about the topic of living benefits, and then we'll kind of close out here. Living benefits. So, whenever we're talking with clients, the topic of life insurance, we want to be as educational as possible and value add as well. And one of the things that I find most relevant on the topic of life insurance is specifying how we're different in a couple of different ways. One of them is by and large that we are level term for the duration of whatever policy we put in force for somebody. So meaning if we get a 30-year term at $20 a month, that 30-year period, they are paying $20 a month. And far too common, we will talk with someone and sit across the table from them and them see that, they think that they have a better deal because it's currently at $18, but they come to find out a couple years later it's going to go up in cost, whether that's through their group benefit through their employer, or they're working with some other company in our industry that kind of locks them in at maybe a 5-year level term, and then it increases slowly, but in time it's going to kind of be a freight train towards a permanent policy sale. That's a further discussion. But the other thing that we then educate on, that we're sitting down with folks and I say, hey, is there something else that we should really be looking at when we're getting life insurance, whether it's permanent or term? And in this case, we're talking about term today, and that's living benefits. And so I'll explain to my clients, hey, it's pretty obvious to understand life insurance, specifically in term. You pass away, there's a death benefit, right? Well, I say, how likely in the next, the people I met with last night were looking at probably a 20-year term. I said, what's the likelihood in the next 20 years you pass away? He's 46. We all kind of laughed and said, well, probably pretty small, right? Well, I said, well, what would happen? What's the likelihood of a stroke or cancer or a chronic illness of some kind? They said probably low still, but probably higher than actually passing away, right? And so there's three companies that we do business with that automatically come with living benefits attached to the policy. And so explaining to the clients what that is and how it works, more often than not, we're going to do business with those companies, assuming there's no other underwriting issues, because as we explain how that benefit comes into play, they see that not as a cost, but as a value. So living benefits, I'll take a step back. All life insurance is going to come with a rider called a terminal illness rider. So let's say some event takes place, no matter the topic, and we get some type of a diagnosis that there's an expectant life expectancy of less than 12 months. Stage 4 brain cancer, they call you up and say, hey, I have potentially like 6 months to live. All insurance carriers are going to come with a rider that if something like that takes place, we can put a claim in and we're going to be able to see what that looks like. How can we get something advanced? How can we pre-plan accordingly, whatever that would look like? Every insurance carrier is going to be different, but they're going to have something like that attached. But what if something were to take place that does affect our life expectancy, but it's not in that the next 12 months category? Maybe we contract a chronicle illness where, hey, you know what? I have, there's 6 activities of daily living. I can't do a couple of these now. I can't eat on my own. I can't walk on my own. I can't change myself. Very common things like that. Or, hey, you know what? I had a massive heart attack and my life expectancy is looking pretty grim, but it might not be in the next 12 months. That's where these riders come in, where depending on where our medical event claim, however you would want to word it, wherever it fits in, we can file a claim with these companies and get access to some of that death benefit early on. And so they fall into two categories: chronic and critical illness. Ultimately, I would tell you that what we're trying to convey to our clients is the ability to get access to this early on. And so the nuanceness of the companies and how they pay out is ultimately for us to understand, to then decide who we would want to go to do business with. But the complexity is not something we necessarily need to convey to our clients unless kind of requested. Joe had made a comment of KISS, keep it simple, stupid or silly, whatever you would want to say. We don't need to sit there and explain the 14 different pages of underwriting requirements, but we can express, hey, client, for example, maybe you have a $500,000 term policy and something takes place. Depending on the severity of your claim, you might get access to 20%, 50%, 90% of your policy right away. And so those are things that we need to then know, how does that pay out? And then how can we have that determine who we would ultimately want to do business with? So there's three companies that will automatically put these onto their policies. First is Nationwide, second is North American, and the third is Transamerica. From here, then, I would charge you to kind of do your own homework. For my client last night, I pulled up illustrations, ran quotes, and then read on the quote how those things operate. I would tell you to consult with those companies to maybe have a salesperson explain these things further in depth. But based on what I was able to kind of quickly grab off of the website, I'll give you based on what I said, and this is where, Ryan, I want you to step in and tell me if I'm saying anything wrong or if this kind of checks out. So when it comes to Nationwide, when I ran the quote here this morning, their chronic illness writer, it actually did not give me any verbiage. It just said, depending on the claim, is you'll get some type of a payout. It did not give me any numbers. Then for the critical illness, so this is a heart attack, a stroke, you get hit by a bus, like something significant takes place. They said that depending on the claim, you're going to get up to a $25,000 payout or 10% of your policy value, whichever is lesser of the two, and you get that per event. So you might have a $1 million life insurance policy, something takes place, you're only going to get up to that $25,000 per event. So plain and simple, it's just numbers. So then moving forward, going to North American, this is where between North American and Transamerica, there's a lot more transparency in what payouts look like. So going back to that chronic illness, something takes place, your immune system goes down, and now all of a sudden you can't do a couple activities of daily living. There's probably, I don't think there's an elimination period. I didn't see anything. I could be wrong on that, but it says that the maximum that you can get is up to 24% of your policy or up to $480,000. Now, remember, these are the types of things that between chronic and critical, we don't need to know the exact details, but I think when we're looking at the specific client to decide what company we'd go with, I want to kind of know these details, but I don't need to know this, before my head hits the pillow tonight. So we can get up to 24% or $480,000 on a critical claim. North Americans or chronic, North Americans critical claim, something significant takes place, we can get at maximum 90% of the death benefit up front. So what that would mean is, let's say you have a client have a massive heart attack and they call you up and say, hey, my life's completely changed. I can't work anymore. I had a heart attack, and doctor is saying I'm expected to get 5 years left of life at best. We can file a claim, and let's just say it's the worst case scenario, and they've got a $500,000 policy. If they can get up to that 90%, we're going to get every bit of a $450,000 check, which is obviously very good to know. And that's where things are radically different. So if you remember, I had said with Nationwide, you get up to $25,000 per event. And in this case, we can get up to 90%. Those are very, very, very different numbers. I have traditionally gone to Nationwide first because they're familiar. I say, hey, they're in Columbus, Ohio. But that type of a payout is not great compared to what we can get now. That's worst case scenario. So not all are going to necessarily be worst case. And in fact, in my 9 years of business, I have not had one claim so far. So we just don't know. And but to know these numbers is really valuable. And then lastly, going to Transamerica, if we look at the chronic illness rider, there's a 90-day period of wait time, and then we got to have at least two of the six activities of daily living. But then from there, same with North American, there's a maximum benefit of 24% per year or at the lifetime 90%. And then with that critical illness rider, it's a lifetime of 90%. So in some case, there's going to be some type of a death benefit left over at the terminal illness rider. Essentially, that is we're just taking what we can get now and running with that. But with chronic and critical illness riders, they're going to leave a death benefit, death, but then we're going to get advanced something on the front end. So I want to pause there. Ryan, those numbers that I had kind of said, does that sound accurate to what you understand and know?
It does. I would say that that checks out relative to basically Transamerica and North American are far more competitive in the living benefit space. So yeah, until you run that, see it for yourself and dig into the literature, which is what I've done too, similar to what Alec is saying he's done. That's yep, that is accurate. And so yeah, that I don't know, did you want to make any final remarks before you pass the baton?
Yeah, and this is probably something you were planning to say too, but ultimately, what I would tell you is these are factors to keep in mind. But when you run quotes, still do that for every person. So, for example, the client that I worked with last night, depending on who we work with, there are like radically different numbers at different rate scales. So I was pulling up a quote for a $500,000 policy for 20 years. And if he's at standard, there's one company that's radically better than the others. If we are at preferred, there's other companies that are better. And so all of that being said, depending on what type of a rating the client will possibly get for the amount of coverage, for the amount of term, we might have someone kind of stand out more than the others. And so we got to keep those factors in mind. And so at the end of the day, we know, hey, it's a quote, it's a term policy, or maybe only getting $200 of commission. So we don't want to work too hard, but it's so valuable to know these things. And, I'm putting, an hour of time into it for 200 bucks. Like, if you went and showed up at Dollar Tree and got paid $200 an hour, you'd be working all bit of that 60 minutes to make sure that place looked clean. And so similarly speaking, we got to put in time and effort into these types of things too, and know what company are we working with and why, for the benefit of the client. So that's where I'll pause there.
Awesome. Yep. Yeah, so I was gonna essentially start my remarks, with the whole premise of life insurance is gonna be it's gonna be all contingent on the prospect or client that we're working with. So knowing who you are about to insure is going to dictate everything Alec has said and everything that I'm about to say in terms of which route you go. So even taking a little step further back is knowing where your client is at from a budget standpoint. So just knowing where our company is at in terms of kind of being more of a middle market company, in general, we're helping people that traditionally get overlooked by our industry. That means budgets are going to be tighter sometimes. And we all have probably client stories to confirm that. So that's where term insurance usually fits the most suitable option to go for insurance needs. So knowing that is obviously, maybe might be stating the obvious, but for any newer people or folks in training right now, watching this recording, that's really, really important. Is just knowing your client, knowing where they're at financially. Um, Too many financial professionals out there pushing, permanent products to people who have no business putting, their hard-earned money into these types of programs. So um, that's just, something that we need to know going in is they're not the, sexiest and lustrous, commission type products. Um, but it's ultimately doing what's right for the client. So yeah, really knowing your client, up and down, backward and forward, and where their budget is, and kind of emergency fund, like that's going to be all telling to determine their ability to take on the premium. So so from there, yeah, you move into, one of these probably three companies. If they're in good health, I'm automatically trying to get my client some sort of living benefit, assuming their health checks out. So knowing their situation and budget is one thing, and then field underwriting is a whole nother thing in our business. So um, being a field underwriter is, again, not something that is fun or sexy, but you kind of have to become a nurse. And Joe, you're great at this because you already do it. So having kind of a little bit of medical acumen and understanding of, what people are telling you, prescriptions, autoimmune disorders, the more data that you can collect on somebody's background, you're helping yourself get that piece of business across the finish line. Because if you don't know something about their health and you get into an application and they're like, oh, yeah, I had this, and you didn't ask that question, you're looking at a chargeback. And for the newer people, that's putting a piece of business forth and then it not staying on the books, and you have to have a commission charged back because of some sort of incident in the application phase that didn't allow it to go forward. So the more work we're doing on the front end to ask good questions, to get a good health screening of where they're at, is really critical. We've all probably had scenarios, where the person doesn't want to confess to the one vape that they had. We all have those stories. Or the one time they smoked a cigar. There's actually insurance companies, I think it's nationwide, where they allow incidental cigar usage. So just knowing everything you can get, about the client and their history and what they've used, the benefit of the doubt is always in telling the truth. And even if it was a one-time incident, knowing that insurance companies, this is important. Insurance companies appreciate candor. I've talked with just sales reps and even underwriters and just learned through the course of my career that they're going to be more forgiving and more understanding of maybe a unique situation if you're truthful. So helping clients, come forward with just anything that happened, or maybe it's a health situation that they're a little embarrassed to share about. I just want to make sure that our newer people understand that this is where field underwriting plays a big part in our role. It's not really in the job description when we sign up right away, but through many cases and getting insurance across the finish line and some not across the finish line, kind of learn some of these lessons the hard way. So that's huge, is being just in the know, helping the client, because your goal is to get the client the coverage they need. So if you guys are on the same page with that, then you need to be forthcoming with your prospect and say, hey, if we're going to get this across the finish line to protect your family, I need you to reciprocate by telling me everything about your health history and where to find your doctors and this and that. So just really important to kind of look at those responsibilities, taking them seriously. And then, yeah, back to kind of where Alec left off is if we're looking at kind of a tighter budget situation where term insurance is obviously the most inexpensive out there. We're generally going to try for Transamerica, North American, or Nationwide. Um, and so, based on what Alex said, with the robustness of those living benefits, Transamerica, North American are kind of, the ones that raise to the top in terms of most value add to providing a living benefit claim. I am personally helping a client with a living benefit claim right now. I shared this a few weeks ago. I think maybe it's been actually a couple months by now. Um, but back in, I think it was March, maybe April, client told me that they were diagnosed with stage 2 breast cancer. So she's 38 and she has a Transamerica LB plan. It's about 6 or 7 years old. She was healthy going into the plan, and it's pretty classic cancer diagnosis in terms of, us getting a doctor's note, having her sign off on that. And it's in review right now with Transamerica. We're hoping to get an answer soon on what she will be eligible for. But I mean, just making that phone call and helping the client through this process has been huge. I mean, they're obviously interested in some alternative treatments that aren't covered under health insurance. And if you know anything about healthcare, alternative treatments are typically all out of pocket. So these are valuable benefits that you don't see them until you personally experience, a claims process like this. So I'll report back on kind of the outcome of that and what the client is able to earn. But I can say that her policy was $500,000. It was with Transamerica, like I just said. So based on the severity and kind of her longevity with the diagnosis, that will all be factored into their claims process. They will tell us a number here hopefully soon, and so that's yeah, to be determined what she'll actually get. So the second point I wanted to make in terms of, okay, so if Transamerica and North American have the most competitive living benefits, who do you go with? You always want to default to running quotes, but by rule of thumb, what I am finding is that the younger the client is, Transamerica is kind of winning out on that premium cost. So it's coming in lower than North American. But as the client gets older, and there's not like a hard date, it's not like 40 to 41 or anything like that. But in general, I've seen through actual client business and stuff I've written that once they're kind of above 45, 50, Transamerica loses its competitiveness and North American actually wins out on premium. I've written 2 North American policies within the past 6 or 7 months here. One was a replacement of a client who just had generic term and she liked the living benefits. So we were able to do that. And then the other one was just a client that actually came to me with assets. We had a bunch of 401k rollovers to do, and so we did that business. But I naturally pressed him on the life insurance. He has a bunch of kids and a wife that doesn't work, so I had to kind of walk him through how do we get some personally owned coverage. And so he fell into that North American recommendation. So yeah, those are kind of the routes you want to take is knowing where your client is at age wise, where they're at health wise. You're always going to be better off by calling either, any of these insurance companies. I've had really good success with Nationwide, sometimes with Transamerica, but you're always better off if you have an unknown situation where you don't know if you want to go forward with an application because of health condition XYZ, call them. They can likely get you an underwriter. You can walk them through what you know about the client, kind of give them a composition, and it's better than a trial application because you're basically getting kind of a soft read on how they're going to evaluate this client. So I've done that many times over. So that's, get your phone numbers squared away, find them from your trainer, whoever you're working with. These companies will generally allow you to talk to underwriters if you press them. Um, Anything jumping out to you, Alec, on anything you want to double down on?
Yeah, it's two things. So the first, it sounds like with this claim that you filed for the client, it's taken a little bit of time. Is that accurate?
It has, yeah. Yeah.
Okay. Did they tell you that's typical that it's going to take every like a few months to go through?
So it was uh part of it is on trans, part of it was just the client being able to get the paperwork signed by her doctor.
Okay.
Um the Kettering Health System down here in my area actually got went under a cyber attack. And so there was a period of time when like systems were down and she couldn't schedule an appointment with her oncologist. So I mean, we probably had like maybe a month right there that she just couldn't get in and see her oncologist. So it's a little bit of both.
Okay. Okay. And then the other thing is when it comes to like the tools that we have at our disposal,
Yeah,
I know you and then I think Joe, you guys have utilized the Shop Your Term website and tools in there. I have you have the ability to share your screen. Is there anything that you might be able to kind of talk on for a couple minutes there?
perfect segue. That's exactly what I was going to pull up next. Yeah, so make sure it's up here. So back in what was it, January, February at our Wealth Wave convention, they launched this website, which is there's no cost to it. This is nothing that is connected to our Wealth Wave account, Wealth Wave One account. So you see just shopyourterm.com is the domain. And generally what I'm using this website for is, so let me back up. The leaders within WealthWave created this entire website to basically take an existing term life insurance policy owned by a client or prospect and to input it into this system to see if they're getting the most bang for their buck is essentially what this is doing. I have not personally come into an existing piece of insurance that I ran and replaced anything yet. But what I will say is from the standpoint of making sure that we're not just telling new people to shotgun this out to prospects. Hey, you have some insurance? Check out this website. Put in your numbers. I would advise against that. I would make sure that we're getting, just like we do in the data collection process, we're getting the facts on an existing policy and then running it ourselves kind of privately to see if there is a better option for the client. So that's just how I'm personally using it. But again, I haven't had a ton of track record with any existing policies. Generally, I'm running into people who just don't have coverage, or they're relying on work plans, which is another scary proposition because job turnover rates in this era are at their all-time highest. And so people who are relying on work plans, we want to make sure that they accept the risk of what they're doing with that decision. Sometimes it can be the right move based on a health situation because most companies don't make you go through medical underwriting. I've had a couple situations where just carrying the work insurance is the best bet for the client. But if they're in good health and they don't have any like huge health, um, markers on their record, then personally owned is the way to go. So that's this website. There's this Learn tab up here. This is something that I probably utilize more. Um, looks like looks like they have this video that works. I've had issues. I think I told you guys on this video working on the mobile version. It looks like it's working right now. Um, but this is a great piece that I've sent to prospects that I'm currently working with. Uh, Covers the 10 times income rule. And then the so yeah, 10 times income is kind of like the one rule, and then there's the dime method, and then there's also the financial X wave. I'm not going to read through all this because you all can get to this website, but this helps people see why you're recommending a death benefit of X amount. Um, so this is the conceptual pieces to understanding insurance. And then did my screen flip over to WealthWave 1?
Yeah.
So here's where we can actually like get into calculations. So on calculators, once you're in your WealthWave 1 account, Tyson did this a few weeks ago. There literally is one for insurance, and you can do this. I'm actually planning to do this later this week with a client. You can basically have this up and just run it real time. What are anticipated burial expenses? How much annual income will your family need? For how long? And then what do you have in current investments and savings, children, one-time expenses? So it allows you to put all these inputs in and spits out a real-time number. So um, I haven't used this a ton, but having it in my back pocket, especially with the number of meetings I'm running on Zoom, and I can screen share and do that. That's really helpful too.
Hmm. Yeah, I think all of these are super valuable. So yeah, just to double down what you said here, Ryan. So these things, these aren't necessarily, not necessarily, these are absolutely not things I would just go and send out to people. Um, Simply because, the value that we bring at WealthWave compared to the rest of the industry is our personal relationship with our clients. And so to just send someone a link, hey, can I beat your current term policy? That is extremely salesy. Now it might warrant you a sale or two. However, I think by and large, the long term is that you're not going to find value in just sending that out to people. And then what I would tell you too is you might want to do some homework on the front end, because where I think that could come into play is you talk with someone, maybe they just recently got a policy. It's not going to make sense if someone says, hey, I'm 10 years into a 30-year term policy, and then they're currently paying $20, and it turns out it's going to cost them like $60. So know your prospect, know your scenario. So for those kind of listening to the recording, talk to your trainer. They'll kind of know when and when not to utilize this. But I think it's super valuable if you kind of know your stuff a little bit. Hey, someone got a policy a year or two ago. You can just jump right on here and kind of show them some of those things. I'm thinking of a scenario. A young guy, he just came to me like a month ago, and was working with another company, had just started a policy like 2 weeks before we met, and felt totally uncomfortable with this other representative, felt like he got sold something, and he did. But I was able to tell him, hey, the current rate you have, I'm willing to bet it's going to cost double to come with us. And he was paying $7 a month. So it's not like he got this like insanely big policy, but it was about $15 a month to come to us to get that same policy, but with living benefits. But it was also level term. And so you got to know those things about this stuff. And so that's why it's so important to not just like send tools out to people and think that you're all automatically going to start making some money, but to know what living benefits are, how they work, and then how we compete with the rest of the industry is all part of being in front of people and getting that experience with a trainer. This is stuff I did not know coming into the industry, and it took a long time, a lot of reps for me to figure it out. But now I have a lot more understanding that I can do that stuff obviously now on my own. And so partner up with me, partner up with Ryan or Joe or Tyson or whoever that you're currently getting mentored and trained by. And those people will absolutely help you navigate these conversations with prospects. So
A
I
big,
don't have anything
I
else.
just want to
Yeah.
add a big add to, I totally agree with Ryan. Don't just, and you, Alec, don't just send this website out to people and say, hey, do it all yourself and then, get back to me because it's not going to work. Um, and it does, it takes away our value. But where this has really came into play for me a couple times is especially what I see it a lot in the healthcare field, right? With having um, a fair amount of nursing clients, is that they all go to their jobs and they sign up for these, um, you know, accelerated AD&D, whatever. I mean, I can't even tell you how many different Voya products ProMedica has. It's crazy. Um, but to the tune of people are paying, 100 to 150, $180 a month for all these things wrapped up in one, and it's just crazy the value that you can get for, and it's all for like 1.5 times their salary, and we all know they're not worth the paper they're written on half the time. So you go and take that, just $150 and put it into something, maybe like this for somebody in their 30s or whatever. That's just a huge value add.
That's a great point. Yeah, the AD&D policies are exactly that. They look great on paper, but there are several disclaimers that have to be known about
Yeah, yeah.
the payout of those. So
Yeah, and you just it's not only that, but then you look at okay, yes, it's fairly inexpensive, right? But you carry this out for 20 years, 20, 30 years, then you leave the job and you got nothing.
mhm,
So just
mhm.
keep that in mind when you're talking to people that are part of bigger organizations such as, up here, ProMedica's, Mercy's, hospital stuff, or just big companies wherever that offer a lot of these ancillary products.
Yeah. Yeah, I think I mean, just as we've come accustomed to kind of the herd mentality of getting jobs and checking benefit boxes, what we're really helping people is come up against the mentality that my employer is going to take care of all my needs, my 401k, my insurance, my income, of course. They just have this embedded idea that, yeah, I have this benefit and it's sufficient. And so that's what we're helping people unpack is the sufficiency of what they think is a quote unquote good benefit. So I think that's what all this comes down to is helping just get through the minutia of all those boxes that they checked at the day one of employment and yeah, making sure that it really is as good of it as a benefit as they think it is.
Yeah. Cool. Well, if we don't have anything else, then we can wrap up here and then we'll get back together next week. We'll be continuing the conversation on life insurance. So we'll see you back here in a week and go and get some life insurance prospects.
Let's do it.
Cool. All right. Talk to you
Peace
guys
out.
later.
Thanks,
See ya.
guys. See ya.